Hello dear audience, it's a pleasure to be with you in today's program. I am Jimmy, and we will be exploring the economic situation in China, particularly the increasingly severe debt issue ahead of the third plenary session of the Central Committee. This significant event will shape China's economic policies for the next 5 to 10 years. According to the Chinese Ministry of Finance, as of April 2024, local government debt has reached 41.7 trillion yuan, equivalent to $5.75 trillion US. However, even more concerning is the hidden local debt, accumulated through financial vehicles of state-owned enterprises or other entities. This can be seen as a debt bomb with many risks. S&P Global Ratings, a company with over 1,400 credit analysts, has recently warned that China's economy is at risk of a bond default in 2025. If this happens, it will be the third time in a decade that the world's second-largest economy faces such an incident. These signs highlight the urgency of the issue and demand strong measures from the Chinese government. In recent years, the Chinese government has implemented strong measures to prevent financial risks, particularly the massive local government debt and the severe liquidity issues in the real estate sector. Experts believe that this strong-handed approach could lead to the next wave of defaults, especially among mid-sized real estate companies, which make up the majority of the sector. According to Ni Hong, the Minister of Housing, Beijing will not bail out companies in severe crisis. This creates significant pressure on businesses and local governments as they have to find ways to resolve their debt issues on their own. The Chinese economy grew by 5.2% last year, and Beijing has set a GDP growth target of around 5% for 2024. However, analysts' forecasts are often lower than this figure. One reason for this is the instability in the real estate market and the issue of public debt. A major issue is whether the real estate market can stabilize and whether property prices can reduce their negative impact on household assets. Local governments are increasingly reliant on transfers from Beijing, reaching a record high of 10.3 trillion yuan last year. The imbalanced structure between central and local governments is the root cause of constraints on the sustainable development of the financial system. Local governments are shouldering many expenses from civil servant salaries, public transportation to hospital construction, schools and urban development. This requires them to seek extra budget revenue sources such as land sales and other financial means, but this also contributes to increased debt. The expectation for the third plenary session of the Central Committee is for significant financial reforms. However, many analysts do not expect a comprehensive overhaul of the current tax system. Instead, they anticipate more achievable reforms, such as expanding the scope of personal income tax to address income inequality or simplifying value-added tax rates. These reforms not only help stabilize finances but also open up new development potentials for China's economy in the future. Professor Jie Sumin from Renmin University of China believes that the obstacles to tax reforms are similar to those hindering the economic rebalancing from investment to consumption. Logan Gry, director of China market research at Rhodium Group in the US, stated that the intention to reform the tax system must be accompanied by efforts to rebalance the economy, but currently, this is not clear. Some experts expect achievable outcomes such as expanding the scope of personal income tax to address income inequality or simplifying value-added tax, VAT, a major source of income for the Chinese government. The long-standing issues in China's financial and tax systems over the past 30 years have led to a significant amount of unmanaged borrowing and rampant local land sales to finance economic activities and development. The National Institute of Fiscal Studies and Development, NIFD, of China emphasizes the urgent need for reform in this system to ensure sustainable development. The information just covered concludes our program. We greatly appreciate the interest and support from our viewers for our programs on the YouTube TV Business Forum channel. Please remember to subscribe and hit the notification bell to stay updated with all the latest information. Thank you and goodbye. Until next time.